For much of 2024, you've seen the big tech stocks completely dominate the stock market. Nvidia, Microsoft, Apple, Tesla, these are your stocks that have just controlled everything. And it doesn't seem like beyond the big tech and the semiconductors, much of anything else really wanted to move. And that was up until July 11th when you got this huge burst of energy out of the small caps. And by burst, I mean July 11th, something changed there to where it jump-started a 12% rally in the small caps. Now, a lot of people are maybe dismissing it now or getting a little bit concerned that maybe that rally is over because last week it finished the last 3 days pulling back, and it did pull back significantly. It went from 226 all the way down to 216. However, today's price action suggested that the rally might not be done yet. And let me tell you, the technicals on IWM, they're pretty impressive here. For a long time, you had this consolidation right here off of this rising trend line. It was just hugging it. And then you had this resistance overhead that goes all the way back to early 2022. And so you draw this line here going all the way across, and you're thinking to yourself, okay, that's going to be a pretty difficult level to break through. However, it was able to do so and do so in flying colors here. So it gapped above the resistance, rallied for another 3 days, then we get the 3-day pullback. Now, on top of that, what I would want to show you is that there's a Fibonacci retracement in play here. And that goes all the way back to here. And I'll get this tidied up a little bit, but you go off of the July 9th lows and you go all the way up to the highs from July 17th, and you have a 38.2% Fibonacci retracement. That's considered a light pullback. Now, one of the more aggressive pullbacks would be like to the 50% or the 61.8% retracement. But here, it was a little bit more shallower, showing that there's still a lot of enthusiasm for small caps. You have some resistance here underneath the 5-day moving average. It's going to need to break through that here in the coming days. But holding it right there over the last 2 days and then bouncing off of it today shows a good opportunity here for us to get back to this 226, 227 level and beyond. Now, price target wise, what I would be looking at is for a retest of these all-time highs. That goes all the way back to the late 2021, and we have yet to retest it. So if you get back up to this 244 area, that could really create a good reward for the risk that you're taking on with the trade. Now, from a risk standpoint, the different ways to play it, there's a couple of plays actually. The first one is putting a stop loss below where this huge gap up took place back on July 11th. Now, the reason why I think that's important is because that is essentially where the rally started. Yes, it was up the day before, but this just looked like a whole bunch of back and forth consolidation. It didn't really make a name for itself until it got to this big, huge gap higher, and it continued to run higher throughout the day. So one logical area to manage the risk would be below the lows from July 11th. Now, if you have a little bit more tolerance or the ability to withstand a bigger pullback, if that was to happen, would be this rising trend line going all the way back to October of last year. So you could play this rising trend line and just say, hey, I'm going to stay in this for a much longer period of time. And as long as this rising trend line doesn't break, I'll be willing to stay in it. And that's a valid way to play it too. But for me, this purple line here, this breakout level is so important. Now, I don't discount the fact that it could still pull back down to this 212 area. But then at that point, I'd be looking for a bounce off of this support level, because so many times when you have a breakout like what we saw right here, this is a huge price level resistance area. When you have that kind of a breakout, you oftentimes see a pullback to the breakout level to retest that support level, to make sure that it holds, and then it launches even higher. So that's still in the cards. That could still happen. However, I like the 38.2% Fibonacci retracement level. I'd like to see how we were able to hold today. But not only just hold that level and rally, but it also led the entire market. It was up 1.6%, while the NASDAQ was up just below it at 1.5%. So it was the leader today. And again, talking about volume, the volume was above average today. It shows that the buyers are still interested in rolling their capital into the small caps. Now, what about an AVWAP here? Anchored VWAP, I love this tool here. Here's another cool thing about it is that you got this anchored VWAP that goes back to the recent lows. When this rally took off, it's pulled back to the anchored VWAP. It's held it the last 2 days and closed above it, and now it has bounced off of it. So it also has the anchored VWAP. It has a 38.2% Fibonacci retracement level. It has a lot going for it. But now let's look at it from different time frames. This is a look at the weekly chart here. Again, the purple line shows a good layer of resistance. It also shows that with this resistance break, you have a cup and handle pattern that's been confirmed. So you have a huge cup, and then you have a handle right here, and then you have the breakout. Same thing can be said about the monthly chart, and even probably better defined. You have the horizon trend line, you have the breakout level right here, and you have a nice solid base that is formed with the breakout, and it would suggest that the breakout is in the early stages. So there's really a lot to like about IWM here. I think it is a very promising trade setup. It's not a guarantee that it's going to work, but one of the better setups that I've seen of late. And I think the rotation into small caps, it's not a story that's over just yet, so it's worth trying to see if it'll play out. And if you enjoyed this video, I'd encourage you to like and subscribe to this channel. Let me know down in the comments below, what is your plans right now? Are you going to stick with the big tech plays, or do you think there's also going to be a rotation into the small caps that continues the narrative that we saw up until about mid last week? We saw it since July 11th, a strong rally into the small caps. Can that persist in the days and weeks ahead? Thank you guys, and God bless.